Hey everyone, John Muhammad talking mortgages with some of my partners that I want to introduce today. We're going to talk about the mortgage process and the home buying process in general. But first, I'd like to introduce Taisha Lewis. And Taisha is a title. What's your formal title?
Actual title, escrow officer.
Escrow officer with Providence Title. So we'll hear from her. Then I have my friend, Mr. Zaire Sullivan with the Sullivan Realty Group. He and his wife are realtors and longtime partners of mine, so we're going to hear from them as well. So, Taisha, tell us a little bit about what you do and how you got into the title business.
Okay, so I've been an escrow officer for about 8 years now. Somewhere between 8 or 9 years. I always forget the count. But as an escrow officer, most people think of us as the people you sign your documents with.
Yeah.
That's people like, okay, so you're the person that sits across the table from me and you sign the documents. Yes, but that is a small portion actually of what we do. So a lot of what we do is behind the scenes. Most people don't see it. But it has a lot to do with real estate law, scouring county records to see what's recorded for a particular property, all because we want to make sure that a buyer is purchasing a property with peace of mind and understanding that when they purchase a property, they don't know the history of that property. They don't know what's been recorded. They don't know anything about previous owners. And so that's what we do. So at the point that they can close with the surety that title is clear. And if it isn't and something arises, they have a title policy that they can fall back on that will help them and will cover them.
Awesome. Thank you. Thank you. Zaire, tell us a little bit. How long have you been in real estate?
I'm going on 11 years in real estate.
Awesome. How did you get involved in real estate?
Man, that's funny that you asked that. So, prior to being in real estate, I had owned clothing stores in the Six Flags Mall here in the Arlington area. And we went from the Festival Mall to the Six Flags Mall. We were relocated because the Festival Mall AC had went out. So I was there at the Six Flags Mall a total of 7 years. And on my last year, the AC and the inline door had went out, right? And it came time for me to renew my lease. And I went to them and I told them the issues that I was having as far as the AC and the door. And when I went to them, they told me if I had just came there, that they could help me. But because I had been there for umpteenth amount of years or 7 years, they felt as though I could do it myself.
Oh, wow.
Right? So at that point, I had a big decision to make. I had gathered a following there and I had regular customers and such. But I thought to myself, how can I, be more cognizant of what these contracts say? Because as a young adult, I was so enamored with actually having a business that I wasn't actually looking at the contract. So I thought to myself, how can I be more cognizant about ownership and more cognizant about contracts? And that's when the light bulb went on real estate, and the rest has been
rest is history. That's awesome, man. That's a great story, and we're going to talk a little bit about what you do to help people get into homes, and I think you have a unique approach to getting things done. I myself have been doing mortgages now for 20 years, been in the mortgage business. And it's just funny how you get into things. What happened with me is that 9/11 happened, and I was managing a call center, and that call center was closing because travel was down. I'm a salesperson, right? And so Citigroup reached out to me and said, hey, we're looking for good salespeople. We'll teach you how to be loan officers. I'm like, okay, I'm going to give it a shot. And so I went through a 6-week class, and they taught me how to be a loan officer, and I've been rolling ever since. So that's just, it's just this things, happen as to how we get in this business, but it's something that I think we're all passionate about and love doing. So, Zaire, I'm going to pose this first question to you. Where do you think someone who is interested in purchasing, where do they start?
Well, I think the start is to hopefully they can have the type of realtor that understands the importance of putting the best interest of the client first. Right, because as a realtor, we're like, say for instance, a conductor, right? So we're dealing with title over here, we're dealing with lenders over here, we're dealing with insurance over here, we're dealing with handyman, we're dealing with you name it, right? So if you have somebody that does this profession with a purpose and really values helping people and treating people with relational value as opposed to as just transactions, I think that's the first step, is to getting someone that undoubtedly has your best interest in mind first and foremost.
Okay. Okay. Good. Good. I think I'm in total agreement with you. I want to take it a step further because it's like the chicken or the egg, which comes first. So do you think it's good for people to find a realtor or to get pre-approved? What is your recommendation to folks?
Well, I mean, it comes in different types of times, like if they happen to know of a lender that's as professional as you and represents the client's best interest as you do, then, by all means, look at what that application looks like so that you can get started on the progress. Because a lot of times there might be some work that needs to be done prior to you achieving that particular goal. If you happen to find a realtor first that can take care of that, then they can facilitate a lot of those wants and needs. I know personally, our job is to, one, represent the best interest of the client first and foremost, and two, solve whatever problems or obstacles that they might have along the path, right? So, if you run into the right realtor, that's great. If you run into the right loan officer, that's great. So I don't think either one has a difference in time, but if I had to make a choice, of course, I would say choose a realtor first.
and that's often how it happens, right? And so, but there's no wrong way. I think that it's up to you as a consumer as to the direction that you want to go. Zaire, you've mentioned something called the disruptors. We've talked about this in the past, but what do you think about some of these online services that offer low rate, low service cost or whatnot, and those kind of things, the disruptors that you've spoken to me about?
Well, a lot of them are currently going out of business, right? Because they built on a model that wasn't sustainable, and they built on the growth that wasn't sustainable. I mean, things go in cycles. Things are cyclical. Think about a roller coaster, how it goes up and it goes down. That's each and every market that you deal with, right? So as far as those go, as far as from the consumer aspect, you have to be aware of the fine print, because a lot of these companies, I won't name any names, but a lot of these companies, there's fine print that goes along with whatever policies. Some of that fine print might be, they'll give you an offer for a property, but that's pending whatever investigation that they're going to do on said property, right? So if they give you an offer for $250,000, then they send someone out to do an inspection, and that number goes to 200, where you already signed a document that you were going to sell with them, and there's no telling what else might be within that document. Some of these same companies charge you a fee for when they put it on your market for the amount of time that they put your house on the market. So a lot of these fine prints, what I would suggest, whatever company that you might be interested in, make sure you look at their reviews, and their reviews will tell you from customer experience exactly what that customer or what that company might have done to those particular customers.
Okay. Excellent. Good point. Taisha, I'm going to jump over to you. How does a person get to a title company?
Okay. So we see different types of clients in different ways. Probably the most common is a buyer and seller that get to us once they've executed a contract, and then that contract is sent to us for us to open up title work on it. At that point is how we end up talking to them. However, we could also have clients that come from refinances. You and I have worked with clients who have done refinances. We've closed those transactions. We also have some people that for sale by owners, right? Those would still come through a contract, but they would not include a realtor. We also have some people that just walk into our title company who are looking for ownership to be changed in some way, shape, or form. Whether it's, a deceased family member and they want that ownership to be changed, they just want a warranty deed to be drafted, and it doesn't include an actual financial transaction. So we see people for a variety of reasons.
That you mentioned that to me before about warranty deed versus
which one, deed of trust?
No, people think that they can just change the title. Like if I want to put the house in my children's name,
quick claim deed
versus a warranty deed.
Yes.
Speak to that a little bit.
So we see a lot of people that ask about quitclaim deeds. Mostly they come from other states. There are some other states that quitclaim deeds are very common. Here in the state of Texas, quitclaim deeds are not recognized for title insuring purposes. So the reason why it's confusing is because if you were to draft a quitclaim deed, execute it, and record it with the county, they will record it. So a person believes they've done the right thing and that ownership has been changed. However, whenever that property or that transaction ever gets to a title company, an underwriter is not going to insure it with that quitclaim deed having been in the chain of title. Oh. So the recommendation is for you to do a general warranty deed or a warranty deed, whether it's a special warranty deed or a general warranty deed, because that way you won't have issues with an underwriter actually underwriting that policy at any point thereafter.
Okay, that's good. That's good information.
So, John, just really quickly, I think it's important that the viewers get a full spectrum of information and a full wealth of information and value. So tell me, as a loan officer, what are some of the opportunities that you're seeing now in the current market with the buyers that have been coming across your desk?
I think that what I've been seeing over the last 2 months is literally every contract that I'm working has a seller contribution. Mm-hmm. And it is... it's a switch. All of last year in 2021 and the first quarter of 2022, you couldn't ask a seller for anything as a buyer, right? You couldn't ask for title policy. You couldn't ask for closing costs. You could survey, and people were having to offer thousands of dollars over asking. That has all changed. I am seeing that. There's a thing people say, I need to go home and pray on it, right? You couldn't do that a year ago. You couldn't pray on it. If you like the house, you better be putting an offer in it before you left that property. And there was families lined up, right, trying to get into these homes. Mm-hmm. And so now it is different, right? Sellers are paying closing costs. They are paying title policies. It is a great opportunity to buy a house. One of the things that I've been saying is marry the house, date the rate, divorce the landlord.
Yes, sir.
If you can afford a home today, it is the best time, I think, that I've seen in a long time to buy a home.
And the reason would be because the opportunity is always wherever the problem is. Am I right?
Yeah, absolutely.
Now, Taisha, I have to voice a question to you as well. I hate to take over the podcast, but I have to voice a question to you as well.
Sure.
So, with families that need to prepare their family for unfortunate deaths and tragic deaths, right? You provide a lot of value in educating them how to get their affairs in order. I know because I've been through that with you, right? And I know the value that you've given. And a lot of this information is not just readily available. And if it is readily available, you have to sift through it to see what's true and what's not. So could you explain to the people ways that you help families get their affairs in order?
Sure, absolutely. There are a lot of transactions we do that come across my desk that have a deceased person in title in some way, shape, or form. And what people don't realize is that there needs to be a legal process to convey the ownership from that deceased person to whoever the heir is. A lot of times people assume, okay, well, this was a husband who has passed away. He was married, so automatically the wife receives interest in the property. It's not an automatic. Something has to actually be filed, recorded, done legally for that ownership to change. So we do talk to a lot of people about estate planning before we even get to the point of someone being deceased. Making sure you have a will in place, making sure those family members are educated and know about your will, know what's in the will, know what has to happen once you do pass away and what your wishes are. Mm-hmm. Let's say that was not done. We help people with doing the affidavit of heirship process. The good thing about Providence Title is we also have an attorney a law firm that we work with. And so they specialize with a lot of those areas that include the estate planning, the wills, the affidavit of heirships, and the probate process if we do need to go down that road.
Awesome.
That's good. That's good stuff. Mm-hmm. Taisha, we see this all the time with clients. In Texas, we have a lender title policy and an owner's title policy, right? And I think there's a confusion on what these things mean and how they help buyers. Can you speak to that?
Sure. We often have a lot of buyers that question that, especially, again, those that are coming from different states where things are handled a little bit differently. But so to make it as easy as possible, a lender's policy is a title policy that insures the lender. It doesn't provide any type of protection or coverage to the buyer. It is strictly to provide coverage for the lender. So in the event that at any point the lender takes ownership of that property and there are any title defects, they have a policy to cover them because they are now the owner. So they may be suffering a financial loss for whatever that defect is. Right. They want a policy to be able to fall back on that to make sure that title is clear and they're covered. Owner's policy now, in the contract, it reads as if it is an optional coverage. And so I think that's what confuses people.
It does.
Is they think that loan policy is also optional. It is not. If the lender is giving you that loan, they are requiring some sort of coverage. Now, the owner's policy piece of it is technically optional, although I would never suggest that anyone takes ownership of a home and not have the coverage. That protects the buyer. So now if there's any defect that results in the buyer suffering a financial loss, they're covered with that title policy. If they have only gotten the loan policy and not the owner's policy, then that buyer is not covered at all. It's the lender that's covered in the event that they are the owner of it. So that's the difference between the two, and buyers really need to understand that owner's policy is to protect them.
Yeah, so I had a situation a few years ago where someone purchased a home and they were refinancing it like a year later, and there was a lien from a bank for a debt. And
prior to them owning it.
Yeah, but it wasn't there when we closed the loan, but when we went back to refinance, that was there, and it was from a bank for a debt, but it wasn't theirs. And that's something that a owner's policy protects, right?
It could, yeah, it absolutely could. If that owner's policy showed that was not an exception to the policy, that would be something that is potentially covered with that policy. But that's a perfect example why you would want to get that. People are human. So let's say, for instance, that title company where they closed when they purchased the home completely missed that lien. Now they're the owner. Now they're going to refinance and that lien is found. It doesn't make the lien invalid because it wasn't found previously. It still needs to be taken care of. So you want a policy to cover you in the event that something like that arises so that you don't have to be the one to suffer that financial loss for it.
Okay, good. Zaire, I need your expertise on this one. So I think I hear questions from buyers like, how are you getting paid? How am I getting paid? Right? I want you to speak to how you're paid. And I would like you to talk a bit about, I've just seen you do some great things in terms of negotiating people. How do you go about doing those things? So,
okay, well, one at a time. We'll start with how we're paid. So as a buyer, our services are completely free to a buyer, right? So we are actually paid by the seller and the seller's agent. Actually, the seller's brokerage shares a percentage of that commission with us. So it would be in a buyer's best interest to have someone represent their best interest because they're not paying anything additional for that, right? So what was part two of the question?
So part two is, I would like you to talk about negotiating, right? The importance, the role that I've seen you play on a number of purchases that we've worked together, that you've been able to get some kind of seller contribution for a home buyer.
Okay. All right. So, I hope my competition is watching. I'm going to give some free game real quick, right?
Yeah.
So what it's about is watching the market, right? So a seller will lie. A listing agent will lie. And that lie is not a malicious lie. It's just because they're not going to say anything to keep a person from buying that particular property because they have a fiduciary duty to represent the best interest of their particular client. And that might be misinformation, right? But the market itself will not lie, and the market conditions will not lie. So say, for instance, if a property has been on the market more than 30 days and it's at that original listing price that it was, more than likely they would consider less, or more than likely they would consider more contributions. You see what I'm saying? Because of the way that the days of the market is. So the houses tell a story if you know how to read the market. Another factor would be condition of the property, right? So if they want market value, but it's not in a condition that could, justify market value, then there's room for negotiation with that because they know there are issues, right? But as we have mentioned, our goal is to solve these problems, right? And sometimes sellers might be in a position where they don't have the money to pay for foundation work or roofing work. We have partners that can help them get that done for the best interest of our clients. So a lot of times we have to end up doing our job as buyer's agents as well as the listing agent's job, just a little bit better. You know?
Yeah. Yeah. He's does a great job of it. You know, I've just seen, you know, folks they walk away very happy and you know, their home's in good condition.
Yeah, I mean, but that's the least that we can do for them choosing us. We realize that they have a choice in the matter, right? And I'm glad they chose someone that appreciates their business, appreciates, you know, the fact that they gave us an opportunity to feed our families. And I think the very least that we could do is give them the results that they're looking for and share resources, you know, resources like lenders like you and title people like you. We're all one unit. Right. So I believe a realtor is only good as his relationships and his resources. Yeah. And those should be shared with the clients and you should get a full package.
Yes. Yeah. So I'll use that to ask the question about why you do work with a preferred lender, a preferred title person when you can, or insurance. I know that banks don't fare well in our market, in the Texas market, you know, and, you know, folks sometimes prefer to deal with a mortgage banker as opposed to a big bank. So what makes the difference for you and your clients?
Well, as we have mentioned, or as I had mentioned earlier, it's a matter of providing solutions to problems, right? You know, and I find that lenders like yourself have more solutions, right? So, you know, there are programs like, you know, lower rate programs, buy down programs, down payment assistance, right? That the average bank might not have. Okay, so think about it from my perspective. I am not just in the real estate business, I'm in the lead generation business, right? So as I get these opportunities, I might just have one shot to get it right. You know, I don't want to send them to 3 or 4 different lenders trying to figure it out because they might not have the patience, bandwidth, or capacity to go through a situation like that. So I'm going to send them to a lender that regardless of what situation they may fall in, we stand a good chance of getting them the results that they're looking for. And I find that in local lenders as opposed to banking lenders. On the opposite side, I've met with some, not going to say any names once again, but, you know, they're trying to get out of there at 5 o'clock. You know, they're going to make sure that they make their lunch. There's no calling them at 9, 10 o'clock. You know, I've called you at times where you've pulled over on the road and pulled up information from me. And I could say the same about Taisha going, you know, above and beyond to make sure that, you know, our clients are represented. You know, as I mentioned before, we're all like part of an orchestra, right? And, you know, the goal is to make beautiful music for the audience, which is our clients.
Yeah, awesome. That is, that makes a difference. We and I think all of us, we operate as a team to get the job done.
Exactly.
You know, it's just so important that we meet the needs of it. You mentioned down payment assistance. We've helped a lot of people with down payment assistance. We've gotten Earnest money back for people, right? I mean, it's you know, but you see the joy that we put on people's face. And I'll use this opportunity to speak to down payment assistance. It is still out there.
Okay.
It's still out there. I had someone close and get back $3,000 last month.
Yep.
Yeah,
it is real.
I had one yesterday.
Did you? Yes. So down payment assistance, it's a lot of ways to get in there, to get into a home. You just got to be willing. And I think you got to be ready. Being ready means you got to have a job.
Bare minimum.
I mean, you got to have a job, right? You got to have income. It's important that you have credit. Now, yes, you can buy a home at a 580 credit score or higher, but really the scores make so much difference in the underwriting, the whole experience, interest rates, everything. I tell people 620 or higher is really where your credit needs to be.
Exactly.
You got to have some money saved. That's number 3. You got to have some money because you got to pay earnest money. You have to pay for an inspection. You got to pay for an appraisal. Right. And so having money is very important. Though we may be able to help you get some of that back, you still got to have some upfront money.
Right.
And then 4, it's your debt ratio. Can you afford the house that you want to buy? And those are the things that I typically look at as a lender. You know, speak to earnest money. What is that? How do people understand earnest money?
Okay, so think of earnest money as a deposit, right? Because it's actually an earnest money deposit, but it's a good faith deposit that you put on the property to secure said property, right? And the way that it works is, once a property goes under contract, it goes into what's called the option period, right? Within 48 hours, the earnest money needs to be delivered to title, and that earnest money sits at title. And during the option period is where the inspection is done. Once that inspection is done, if we can come to terms, we're moving forward, right? But within that 7 or 10 days or however long the option period is stipulated within the contract, if we cannot come to terms, and it is canceled during that option period, then that earnest money is refundable back to the buyer.
Yes.
And there's other instances, and I can't give away too much, where the earnest money is refunded back to the buyer as well, having to do with the financing and the financing addendum,
Yeah.
So earnest money is a deposit, and it's protected by us at all costs as far as representing the best interest of the buyer. Right. So hopefully that gives a little bit more insight of what it is.
Yeah. And Tice, it's always funny for me I think I've dealt with buyers who think they're giving the money to me, like to the lender, right? How does title hold on to monies exchanged throughout this process?
Yes. I've had people write earnest money checks to me in my personal name. So it is important that people know that money is going to the title company, because I mentioned that I'm an escrow officer. Escrow meaning that we are handling the finances, the fiduciary of the transaction. So when that earnest money comes to the title company, we hold it in an escrow account. We hold that in an escrow account until if the transaction closes. At that point, it is credited back to the buyer at closing, or if the transaction doesn't close, then as you mentioned, whether it's refunded to the buyer or what have you, then we're the actual entity that is doing that. So we're handling all the finances according to the closing statement at closing. If there's a payoff to be paid, that's being paid. The proceeds to the seller, that's being paid. Taxes to be paid, that's being paid. Fees that the lender may have or what have you, we are actually the people that are collecting the funds and then distributing or dispersing them the way that they need to go according to that document.
Yes. Yeah, we do not take money, right? As a realtor, you don't give us any money up front. The only thing that you pay for with me is an appraisal. Yeah. And that money is taken out of your closing costs. But besides that, everything else is done at closing.
And on the flip side, your mortgage payment does not come to the title company.
Right.
Because I do have people call ready to make their first payment to Providence. No.
Yes, that's true.
So, John, just a quick question really quickly. I think it's important that, we express how we do some creative things to help potential buyers, right? So I've had some situations where a buyer might get you their information and they might not be ready right then and there, right? They might need a couple of instances where they might need to do a refinance on a vehicle. And I know you've been relentless about looking at possible solutions, and I've been right there with you, like, have you tried this and have you tried that? Yeah. So could you explain to the people some of the ways that we use creativity to make sure that their best interest is taken care of when it comes to buying a home?
Well, that's why they call me the home loan specialist, right? Because I do take pride in figuring out things, right? And so I hear from people because we have a misunderstanding of credit. It's because we haven't been educated on it. Right. We think, one of the common things I hear is, I don't want a hard pull. Right. Do you do soft pulls, right? No, I do hard pulls. Why is it important to do a hard pull? Is because I have tools called simulators, credit simulators, that I can get in and simulate changes to credit reports, paying off credit cards, paying down debt, getting deletions. Often when people are going into credit repair, sometimes they go into a hole where that takes months, right? And I may just be able to say, call this medical collection agency, offer a pay for deletion, meaning I'm going to give you the money I owe you right now, but I need a letter saying you're going to remove that from my credit report. We do that and then get it deleted within 5 days from their credit report, boosting their credit. It is a real deal. And I find that I don't even really have to send people to credit repair too often because of that. But yes, I have partners who can refinance cars. being removed as an authorized user. I'm doing that right now for some folks. They thought that being on mom's card was helping their credit, and it's not. And so we're removing them, and their scores are going up. So we're going to look at that. We're going to look at if a refinance is needed for a car. Maybe it's a cosigner. Maybe it's using down payment assistance and the cash they have on hand to pay debt off at closing. Taisha knows that she's like, come on, John, you got 10 accounts that's being paid off, because you got to handle all of that. And so, we have to do what we have to do for people. But those are things that I don't know that all loan officers look at.
Right.
But there are ways to do it. And if I see a way to do it, I believe that I can figure out how to get it done.
And that goes back to the reason why I choose lenders like you over other lenders, because we have to have the same type of tenacity and the same type of energy when it comes to providing solutions to our clients. Right. And sometimes we have to think creatively.
Yes, absolutely.
What would you say, John, right now, interest rates, people are scared, they're nervous, especially when you have the new home buyers who were not around back when the interest rates were what they look like now. What would you say to that person now to encourage them to go ahead and move forward with the process now, and what their options may be later?
Yes. Yeah, absolutely. The interest rates are higher. They're in the sevens for some people, but I'm seeing that when folks have really, really good credit, it's in the sixes, right? And so that sometimes happen. But if you can afford it, if you can afford the house, you can get in it now, you will have the option to refinance.
Right.
Generally, you need to live in the house 210 days, make 6 payments, and you'll be eligible to refinance. Just depends on the type of loan that you have. But that is the idea. You've got to get in now. Why it's easy to get in. We mentioned this earlier. Last year, in the first quarter of this year, only types of loans that sellers wanted and their agents wanted was conventional.
Right.
Or cash.
It had to be conventional or cash, right? Now FHA is back. VA is back. USDA, whatever you need to do, you can get in a home and plan on, if we get you in there with that 620 score. Because believe it or not, you can get DPA, you can get down payment assistance at a 620 score. The cool thing about down payment assistance is that if the same guy who's got a 620 versus a person who's got a 720, they're getting the same interest rate under down payment assistance. That is not a variable of credit score. It's just a matter of we can get it approved. So if you're getting into the home now, plan on refinancing it, right? I've refinanced my house 2 times in the last 4 years. I think is what I've done. And my payment is as low as most people's rent. I have never heard a landlord or heard a story about a landlord calling and offering a lower payment on rent. Hey, next year we're going to lower your rent by $300. Not happening.
Right.
The prediction coming from Fannie Mae is that rates will drop in the second or third quarter of 2023.
Right.
Okay.
If you're ready to refinance your home and get a lower payment.
Right.
Got to get in the house now, though. It's a great time, great opportunities to get in the homes.
Yeah. So just to piggyback off of that, I study the market a lot. I look at the houses that are sold every month, and every year real estate is cyclical, right?
Yeah.
So now it's going through both a cycle as well as the impact that rates have had, right? So, we got tax season coming up, right? So every tax season, people either buy a house or a car, right? Well, most people already got cars already, okay? So if you know business and you know supply and demand, when more people are looking for houses, what's going to happen to all these incentives that the sellers and the builders are giving, right? So I wanted to make it clear to the people that are looking that we have a short window before tax season where we're going to have these incentives, right? Because these incentives will more than likely go away based on the way that the cycle works when the tax season comes back around.
Wow.
That's a good point.
That's a good point.
Yeah.
Well, I enjoyed our conversation today. I do want to end. I always ask my guests about what you like to do around town. How does Taisha and family spend their time?
Ooh, good question. Most of the time, because we do have 3 children, it is at some sort of event, dance competition, football game. If it is just Taisha spending time, I love wine. So I like wine lounges. I like Poured in Mansfield. That's a good one. And I also love to eat. So one of my favorite restaurants in the city is Monarch, downtown Dallas. You and I have been to Albernays before.
Yeah,
you know how much I love Albernays. Yeah, Albernays and Monarch are kind of 2 of my top there. So I love that.
All right, nice. Zaire, what do the Sullivans do? Where you like to dine?
Well, first off, shout out to my beautiful wife, Renee Sullivan, co-owner of Sullivan Realty Group. One thing that we like to do is we like to feed our kids and we like to eat ourselves. So we go to several different restaurants, right? Aside from everything else, it's just about the kids and all of their activities and stuff. They go, Disney World and stuff. But locally, we really like Mercury Chop House, right? A lot of people aren't aware, but they have delicious steak. And a lot of people wouldn't notice it because it's in like an office building, but the steak is superb. Other things that we like, Gus's Chicken in Fort Worth.
Oh.
That's phenomenal, right? Off of Magnolia, right? Like we go all the way to Fort Worth to get Gus's, right?
Put that
And
on.
then I gotta shout out my brother Hershey from Chicago, hometown man. He has the mild sauce here in Arlington.
Yes.
And go support him. He's opening up a new location, so go support him as well.
Okay, all right. Yeah. I didn't know that.
And Uncle Julio's. We like
Another
Uncle
favorite.
Julio's.
Yeah.
My wife is a Payway fan. So we go and eat a lot, and we make sure that the kids have a good quality of life when it comes to taking them out and enjoying things as well.
Yeah.
Yeah, one that I didn't mention you just made me think of is the Vault in Mansfield.
Yeah.
Good
I
one.
love the Vault. That's a good
Primo's
one.
is pretty good too.
Yeah.
I had the chance to dine at Pangea in Garland recently, and it's a black-owned restaurant. I mean, but the service phenomenal, and I had jerk lamb, and
That sounds
oh
so
my
good.
gosh.
It sounds so good.
Another good one. Have you tried the lamb in True Kitchen? True Kitchen is the truth too.
Okay. Now I haven't tried that.
True Kitchen is delicious. You got to get reservations, but it's worth it.
Okay, that's in Dallas, right?
That's in Dallas, yeah, but it's worth the trip.
Zaire got good, right? I'm like,
We eating good over here.
I think that some people call us transplants. You're from Chicago, been in Dallas for 20 something years. I myself am originally from St. Louis, and I've been
York.
coming. You're from New York.
Yeah.
You're from New York.
Yeah.
What part of New York are you from?
Brooklyn.
From the Brooklyn.
Okay. Yes. So we get to join the whole Metroplex. I've been here for years, but I truly enjoy spending time in Dallas, Fort Worth, Arlington, all over the Metroplex. And I think for anyone who's considering moving here from a different state, you are welcome here. I never have felt like an outsider all the years that I've lived here. It is a melting pot of people from different cultures, different races, coming from other parts of the country.
Yeah.
Most people that I come across, they're not born and raised in the DFW area, but this is a great place to make home. I've traveled the whole country for years for Citibank, and this was the place to be. This is where it's at. And so I wanted to shout out DFW. Thank you all for attending and being a part of this podcast today.
Absolutely.
And
Thanks for having me.
we'll end on that note. Thank you.
Okay.